Ladies and gentlemen, this is TVP World. I'm your host Benjamin Lee, and welcome aboard the Eastern Express. Russia likes to present itself as a financial fortress, immune to sanctions, rich in resources, and prepared for any economic storm. But fortresses are only impressive until you notice the gates being sold to fill the state coffers. Because right now, the Kremlin is quietly liquidating gold and foreign currency at a record pace. Not because of some get-rich-quick scheme, but to keep the budget afloat as oil revenues collapse. This is a warning light. So let's take a look at our latest report to find out more.
Russia's economy has long been propped up by oil sales, serving as a lifeline for the Kremlin going into the fourth year of the full-scale invasion of Ukraine. Yet the price of Russian oil is plummeting to some of the lowest levels since 2020. The situation for Moscow took a turn for the worse in October 2025, when the United States announced new sanctions on Russian oil giants Rosneft and Lukoil. Russian oil became more risky and politically problematic for buyers, and at the same time more costly to insure and transport. With Ukrainian drone operations frequently targeting Russian ships and port infrastructure, the cost of insuring this infrastructure has increased in recent months. This depresses the revenues of Russian producers significantly. As of mid-January, the price of Russian oil loaded into tankers in the Black and Baltic Seas has been around $40 to $43 per barrel. These prices represent a major blow to the Kremlin that based its 2026 budget on the assumption that average annual oil prices would rest at $59 per barrel. With analysts warning that Russia's economy is likely headed for a recession in early 2026, the Kremlin may be forced to adopt unpopular policies to account for underperforming oil revenues, including raising taxes or taking from Russia's sovereign wealth fund. While fighting in Ukraine continues, the Kremlin may find that heavily supporting its economy with oil revenues is a precarious arrangement.
And now, let's zone in on the East Plain portion of our show. With fresh U.S. sanctions and Ukrainian attacks against Russia's energy infrastructure, the Kremlin has been left with a major dilemma. Where can it export energy to? Without large energy exports, be it oil or natural gas, Russia is facing a rough patch in its budget. Yet Moscow has seemingly found an answer to its energy problem in China. As always, here's a closer look.
In 2025, Russian natural gas exports via pipeline to China reportedly grew by 25%. This comes as Moscow has attempted to strategically reposition its energy exports towards Asian markets rather than European ones. According to sources familiar with the matter, Russian energy giant Gazprom saw gas exports to China via the Power of Siberia pipeline reach nearly 39 billion cubic meters in 2025, up from 31 billion cubic meters in 2024. India has also become a top importer of Russian oil since the beginning of the invasion of Ukraine in 2022, with New Delhi walking a fine diplomatic line to maintain positive relations with the West and Russia. As European energy markets close their doors to Russian imports, Moscow has turned to new partners across Asia to export fuel. Yet critics argue that Russian energy exports to Asia cannot make up for the lost revenue through sales to Europe, leaving Moscow with less room for economic maneuver.
And now, let's take a look at the issue in greater detail. For years, the Kremlin insisted that sanctions were not a problem, that Russia had adjusted, and that the economy was not just stable, but resilient. The evidence, we were told, was in the numbers. And to be fair, Russia did have a number that mattered more than all the others: oil. Oil paid for the war, oil paid for the budget, and oil paid for the illusion that everything was under control. Now that illusion is now being quietly liquidated, literally. In January, Russia's federal budget revenues from oil and gas are expected to collapse by nearly half compared to the same month last year. A 46% drop. Now that is a structural failure. Even December, previously the worst month of 2025, now looks almost respectable by comparison. And this matters because oil and gas are not just another revenue for Russia, they are the system. And when that system falters, everything else starts to wobble. The reasons are not mysterious. Global oil prices are lower, discount on Russian crude are deeper, and the ruble, ironically strengthened by capital controls and forced currency conversions, has made oil taxes less valuable in ruble terms. In December alone, the effective ruble price of oil used for taxation fell by more than 50% year on year. Russia budgeted for oil at around $59 a barrel. But in reality, Ural's crude fell closer to 39. Now that is a hole in the bottom of your ship, and to plug it, the Russian government is doing what it swore it would only do in emergencies, selling off the National Wealth Fund. And it's happening at a record pace. Between mid-January and early February, the Ministry of Finance is selling gold in Chinese yuan worth over $2.5 billion, faster than during the pandemic, faster than ever before. This is like cashing out on the furniture to pay the rent. The National Wealth Fund was designed as a shock absorber, a buffer for bad years, a reserve built from oil surpluses meant to protect the state from exactly this kind of external pressure. Before the full-scale invasion of Ukraine, it held over 400 tons of gold. Today, 60% of the fund's gold has already been sold. What is left is shrinking towards a psychological and political threshold: $50 billion in liquid assets. Once that barrier is crossed, the conversation changes from management to survival. This is the hidden cost of the war, not the immediate military spending, which can't always be justified as security, but the erosion of the fiscal base that keeps the system running. There's no dramatic announcement, no emergency address, just daily sales of gold and yuan buried in finance ministry statements. Russia is simply burning through its strategic savings to sustain a war that produces no economic return and steadily degrades its main source of income. This is how economic stress looks like in an authoritarian system, managed and obscured until it isn't. And now, here to shed more light on the issue is Mark Manemi, co-founder of the Ukraine Business News Network. Hello and welcome to Eastern Express.
Hi, thank you for having me.
So today we are once focusing again back on the Russian oil and its impact on the economy, specifically the sanctions. Well, over the past couple of years, we saw kind of Russian oil still circumventing the sanctions by utilizing third-party trade, but we're wondering how much impact that's going to ultimately have when it comes to the long-term Russian economy, seeing that it does seem to be dwindling.
Right. It's a massive problem. The budget now, compared to previous years, about 25% of budget revenues are coming from oil and gas export revenues, whereas in the past it had been closer to 40% typically each year. And that's because you are getting declining revenues, so those revenues had to be made up somewhere else, which is equally problematic because the economy has been in recession for the civilian side of the economy, I should say, has been in recession for at least the last 6 to 9 months, which means this year's going to be quite traumatic for the Russian budget because they're going to undershoot most assuredly on the oil and gas export revenues compared to the plan for 2026. But then also on the civilian side of the economy, the non-oil and gas budget revenues, they are most definitely going to also undershoot. GDP is never going to come close to the levels that they're predicting for the economy. Tax receipts are never going to come close when you're looking at income tax, corporate income tax, even the VAT plan, the VAT revenue plans for this year, in which case you're going to have continued problems with revenue. And now you have the spending issue, of course, which can't go away. They need to continue to increase the defense spending, despite the fact that in the budget, they're trying to control the defense spending this year compared to last year, which isn't going to happen, of course, as the war will continue this year. So they're going to have a massive budget problem, major deficit again this year. And then it just depends on how they go about trying to control that over the course of the year.
Right, and I think we can already sense the desperation there, seeing that they are selling their oil at a discount, partially due to the lack of customers, so to speak, but also because of the volume that they have to push out. But does that not indirectly benefits those countries that's kind of like a midway point between Russia and the other countries, namely India and China?
Sure. I mean, since the beginning of the war, they've been enjoying, obviously, discounts on Russian oil, which it does benefit them, of course, but these are transactional relationships. India, in particular, is not, I mean, there's some greater political rhetoric aligning the two countries. But at the end of the day, this is a transactional relationship. I would even say to a degree that's similar with China. And China is taking advantage of Russia's situation, really exploiting Russia's situation, getting extremely good prices on everything that they're importing from Russia, not just oil and gas. And so I wouldn't say this is necessarily helping build relationships in any genuine way with Russia's export partners, but this is just simply firming up those relationships. And then you add to it, for example, in December, kind of a news piece that was missed, which was quite important, was that Russia issued a $5 billion yuan bond. So really cementing that financial relationship, deeper financial relationship with China in particular, which China, of course, is happy to do as we go through this period of de-dollarization and China trying to, of course, increase circulation of yuan in the global economy. So again, more beneficial to China. And this is part of the continued process since 2022 of Russia having to basically bend over and continue to really, frankly, sell out its country to China in particular, but really any foreigner in order to continue to prosecute the war. So they're really Russia, the Putin government is really mortgaging Russia's future due to the war in Ukraine by selling out the country to China in particular, but other export partners who are taking advantage of the situation.
Right, I really like what you mentioned there, mortgaging its future to other foreign countries, especially China. And I would like to explore that a little bit more as well. Like you mentioned, Russia has become very reliant on China, but I can't imagine that being good in the long term. But can you help us spell it out? What are the implications and what are the impacts of this over-reliance might result in?
Sure. I would say long term. Let's say this war, and it's a war of attrition. It's been going on now. This is the fourth year. It goes on for another year to 2 years, which is very possible, of course. That just means Russia doesn't have the resources to continue to prosecute the war at the level. I would say, importantly, at the level that it's been prosecuting the war for the last 4 years. So, in order to do that, they're going to have to get more resource support from China. The problem is China, of course, is not a genuine bona fide ally in the same way that Western countries are allies to each other, have been allies to each other historically. China's taking advantage of the situation and Russia's junior partner status. But this is massively problematic for Russia. And we even hear it from major businessmen in Russia who complain. And this is all predictable, of course, but they complain that working with the Chinese is massively problematic. They can't come to any quick deals. China delays. China takes advantage of them. China makes false promises. And when I say China, I should be saying more specifically regional governments, businessmen who they're interacting with. So this is not working in Russia's favor. And the Russian businessmen would love, if they could, to turn back towards Western markets, which even if they didn't particularly like those relationships or those business transactions, they worked in Russia's favor far more than the current transactions do. So when you think longer term and politically, again, we're starting to hear some of the hawks within China talking about Chinese irredentism, about Chinese lands, historical Chinese lands that exist in current Russian territory. This was all, again, predictable 10, 15, 20 years ago, that as China was growing and Russia was minimizing, was falling as a global power, that China would take advantage of the situation. Now, Putin accelerated that process dramatically in 2022. And now you're starting to hear these Chinese hawks talking about some of these things. So when you think politically and territorially, China taking advantage of the situation, but then on the business side and investment, that's abundantly clear. And in terms of Chinese workers into these eastern Russian lands in Siberia, taking over the auto sector effectively. And now if Russia moves to actually have China increasingly help finance Russia's budget and finance the war, this will make Russia extremely dependent on Beijing, even for political decisions in the years ahead.
Right, and it does seem like that is the Chinese usual MO as well. Create an economic tie, create reliance, and to a point where eventually if they do want to make any sort of move, there's no longer any pushbacks due to the economic pain that it might incur. Do you think that that is eventually what's going to happen to Russia if they keep going down this line? And you also mentioned Russia becoming essentially China's junior partner. Do you think that the global superpower status will see a shift as a result if the economic impact in Russia persists?
Yes, absolutely. I mean, that's what we're already seeing. This is how China behaves, but also this is how Russia behaves. This is how, when you think about the economic and commercial interactions that Russia had with Europe and the United States to a degree, but with Europe, particularly in energy. These were, of course, commercial projects, but as it is with the Kremlin, commercial projects always are fundamentally political projects. And so they were able to use Nord Stream 1, Nord Stream 2, use these as political footballs to blackmail Europe in the end, which is, of course, what ended up happening. Now, you asked about China, and that's accurate because China behaves the exact same way in the international realm. What's particularly dangerous for Russia, actually, counterintuitively, is that Trump, it's this transactional president out of the United States, is actually behaving in a very similar fashion. And Russia may not like this as we move ahead. For example, the rules-based order and rule of law and respect for international borders. China has the longest international border in the world with China. Is Russia really going to like when we start to see the sanctity of borders removed, for example? Also, in this burgeoning world, you mentioned Russia is a global power. If we move into this world that Trump is talking about, and even recent days, this board of peace, if that were something in a world to supplant the UN, Russia is no longer a great power. Russia, one of its features of its great power status is the fact that it has a seat at the UN and has veto power over these major global decisions with the United States, with China and others. If you take that away, Russia is really just what it is, which is a middle power. It's not on par with the United States or China by any means, or the European Union as a collective entity. So this may not be so beneficial these coming years if we are moving into that more transactional world where Russia actually fits in that world. They will be an extreme junior partner to China that will be have orders dictated to it, but likewise by the rest of the global powers.
Right. And last but not least, at this point, do you think that there is still any space for Russia to maneuver to turn the ship around, or is the reliance on the Chinese economy just too entrenched to make any changes now?
Under Putin, the answer is it's too entrenched. And I say that because we know the direction of travel for future foreign policy and domestic policy under Putin specifically. He is going to continue to double down on the war in Ukraine until he achieves his political objectives there. So he is selling out everything else and sacrificing everything else in order to do that. So to answer your question, yes, further entrenchment under Putin. Now, in a post-Putin scenario, I tend to believe actually that we're going to see a reversion back to stronger Western engagement, as it will be possible, depending upon the terms, of course, of the end of the war. But there's really no benefit you have to think, the next era of Russian elites, say the 50 to 60-year-olds, not the 70 to 80-year-olds that Putin's representing. There's no real benefit for them to have this deeper entrenchment in China and complete isolation from the rest of the global economy and isolation from Western partners. So I do expect a sort of reversion, but only in a post-Putin environment.
Right, so it does seem like Putin's war in Ukraine they've been taking a bigger toll than they expected. In the meantime, thank you so much for your input and insight. Really appreciate it. Thanks for being with us on Eastern Express.
My pleasure. Thank you.
And now we're moving on to the Eastern News Flash, a series of all the other stories from the East they don't want to miss. According to Ukraine's military intelligence, Russia spent more than 10.2 billion rubles, roughly $131 million, on its January 20 air assault on Ukraine's energy system.
The large-scale strike targeted Kyiv and other regions during a period of sub-zero temperatures, damaging electrical and heating infrastructure and leaving thousands without heat. Ukrainian authorities said Russia launched 33 missiles and 339 drones, including ballistic and cruise missiles, as well as Iranian-designed Shahed drones. The attacks triggered rolling blackouts and emergency outages nationwide, while grid operator Ukrenergo warned that repairs and power plant shutdowns have worsened the situation.
Russia's Higher School of Economics, a leading Russian university, has acknowledged that it is encouraging students to enlist in the military. Legal experts warn that the recruitment campaign is built on misleading claims.
Students have been enticed with promises of large enlistment bonuses and assurances that they would serve in newly created drone units for just 1 year and away from the Ukrainian front line. However, lawyers familiar with Russia's conscription system caution that such guarantees are unreliable. Under Vladimir Putin's September 2022 partial mobilization decree, which remains legally in force, all military contracts are effectively open-ended. As a result, students who enlist could be reassigned at any time, including to the front line or assault units, regardless of initial promises.
Georgian officials are scrambling to contain the fallout from the apparent publication of a late 2025 state decree revealing that the country is becoming more dependent on Russian natural gas and paying more for it.
The document shows that gas imports from Gazprom rose sharply in 2025, and that Georgia is now paying a higher price for part of those supplies than under previous contracts. The disclosure has dealt a political blow to the ruling Georgia Dream Party, as it coincides with a broader shift away from the EU and the United States and reverses years of efforts to reduce reliance on Russian energy following the 2008 war. Authorities have launched a security investigation, treating the publication as a potentially illegal leak rather than a policy failure.
And that's all on this episode of Eastern Express. But for more news, update, and commentary, please stay tuned to TVP World.